Hello, my name is Allison Schneider. I'm a senior fellow with GRESB and would like to welcome you to a webinar to discuss investment trends and infrastructure in Asian markets, including through the lens of sustainability. This webinar is the second of a series that will speak to key enablers, inhibitors, and workarounds to advancing investment in sustainable infrastructure in Asia. I'd like to welcome our distinguished speakers. Uh, we have over here Yang Zhang, based in Singapore. He works with Caring Energy, and Yang has over 20 years of experience in investment construction and operation management of infrastructure projects, particularly focused on energy investment, power station investment, and financing, post loan and project refinancing. And China Huadin is one of the major power producers in China with assets of $160 billion assets under management. Then over here we have Desmond Go. Desmond is based in Melbourne, Australia, and he is an investment manager, unlisted assets with HESTA. HESTA is a specialist industry Australian super fund with $83 billion assets under management and deep connections to health and community services. Desmond is responsible for originating and managing private asset portfolios, including leading due diligence and analysis on funds, co-invests, and direct opportunities with infrastructure property and opportunistic growth. Too many P's. And then here we have Sharina Hussain. Sharina is based in Toronto, and she is a faculty member of the Brookfield Center for Real Estate and Infrastructure program at Schulich School of Business, York University in Toronto, Canada. She is an academic advisor to the Global Infrastructure Hub and was the first academic director of the G7 Investor Leadership Network program for emerging market fellows. So we're here to discuss infrastructure in Asian markets. And the business case, of course, is very strong for investment in core infrastructure. It's imperative for economic growth and sustainable development. And as far as the investment benefits go, you have diversification, downside mitigation, inflation protection, income, long duration, non-correlated to markets, and it works well for pension plans. And as global megatrends like energy transition, grid expansion, decarbonization, and digitalization gain momentum, infrastructure naturally plays a key role. It's estimated that Asia Pacific will need to invest 1.7 trillion US dollars annually a year to meet their annually obviously to meet their infrastructure needs. Institutional investors have also increased their asset allocation to infrastructure over the last few years. P&I reports it at 5.5% of AUM. I noticed, Desmond, that it was 10.7% of AUM for HESTA back in 2021. I don't know what it is now. Also, Asia is home to 3/5 of the world's population, and World Economics estimates that Asia will command 58% of global GDP by the year 2040. So clearly, the opportunities are vast. Yet, while some investors, LPs and GPs, focus on or include Asian emerging markets in their core strategy, others are really wary owing to perceptions of heightened geopolitical and investment risk. So let's kind of unpack this a little bit, bearing in mind that there is a lot of political uncertainty right now, and we're not offering investment advice right now. Can you speak to how you view investment in Asian infrastructure today? What is the opportunity or the risk, and what makes it attractive? I'll start off with Desmond. You're on mute.
When we started investing, oh, can you hear me now?
Yeah.
Sorry.
Yeah,
Okay.
yeah.
Yeah. No. Thanks, Alice. Happy to share a few comments. So when we started investing in Asia, we thought about this back in 2019 when we made our first sort of deployment into the market, and there were sort of three key factors for our motivation on why we viewed Asia as attractive. Obviously, the strong demographics you talked about, diversification, and what we felt was less competition from a bottom-up perspective. On the demographics, it's significant, as we all know. Back in 2018, we did a whole research piece around both the top-down and bottom-up. What we found was growth opportunities from the top, but also embedded risk from the bottom. And there was a real need for a local presence piece there. We also felt diversification of each country was very distinct. You can invest in Asia from both the developed and emerging countries perspective. It allows you to target more value-added and developed countries, more core and emerging markets, and it helps you manage your overall risk profile, which we thought was really attractive. from a whole of portfolio basis, our exposure on the listed equity side was very small to Asia in general when you think about global GDP and some of the stats you've quoted. So we felt this was a way to access long-term themes with greater information insight on the private market side on specific companies that we're deploying capital into. And probably the last point was less competition. Our approach is to work with sponsors with a local presence in market, and opportunities tend to be more bilateral and relationship driven in Asia and emerging markets. For competitive auction processes, we've seen less GP participation. Comes back down to the breadth and diversity of the Asian market, how distinct cultures and opportunities are. You need to have offices in each of the countries versus trying to operate out of one central location. It's very much a local game to sort of deploy into that market.
Interesting. Thank you, Desmond. Yang, so Asian Investor reported last year that Asian institutional investors are shifting their allocations into real estate owing to lagging property values and towards infrastructure. And Preqin released a report that predicts infrastructure investments will take over real estate as private assets in the 2030s. Just wondering, do you see this happening at all, or what do you see in terms of the trends in investments in Asian infrastructure? Do you want me to ask a different question? You're on mute.
Oh, hi.
Shall I ask a different question? Do you prefer I ask a different question? Yes? Okay. All right. Yang, are certain sectors or regions more promising? Can you speak to the types of energy projects Huadin is working on?
China Huadian as a group is transforming from a traditional power producer to a major player of clean energy like hydro, wind, and solar power. This is a rapid transformation, and we can see clean energy has now taken half of our total installed capacity. And especially for the overseas investment sector, we now mainly focus on the renewables. And this is basically how Carry Energy was founded as a pure player of kind of clean energy. And this can also explain why we focus on the ESG risk and why we applied for this GRESB benchmark assessment.
Great, excellent. And Huadin was one of the first entities to actually conduct a development assessment, which the development assessment takes infrastructure projects at an earlier stage, pre-operational, and you can actually look at the ESG characteristics of the investment. So you're finding that to be quite useful, Yang?
Yeah, it's quite useful. Although we start from 2021, apply for some certificate from some European companies, and we focus on the risk from biodiversity and communication with our local communities, but from the apply for certificate from GRESB still help us to improve our management, and we can have good reputation in our customers.
Okay, thank you. Sharina, do you see certain sectors or regions being more promising in Asia overall? I know that you've also been involved in advising some Asian governments with respect to their infrastructure strategy. So what trends are you seeing?
We're beginning to see several countries, and particularly their different infrastructure sectors, become more attractive for a variety of different reasons. And some of the work that I've been doing in terms of not only advising different governments, but also looking at how then to create an investment climate that is amendable or attractive to different forms of capital, including institutional capital, is to examine what are some of the key drivers that are then enabling these industries to become more attractive to investments. And what we have found, in particular in some of the seminal research working with institutional investors, is to examine many of the characteristics that Desmond had mentioned, but framed slightly differently. One being looking at those macroeconomic drivers. So, what are some key pillars such as political stability? What does it mean in terms of GDP growth, per capita? And aspects related to monetary and fiscal policy, and using that as then the foundational element to help screen or identify what could be specific sectors and or countries that could be of interest. The next is to look at the opportunity set, and that's where the infrastructure programs, so not just projects, but the programs that look at multi-year and having the depth associated to then enable different investors to make the time, effort, and resource commitments to better
Mhm.
understand not only a region, but also certain sectors. And this is where we've heard about renewable energy and transportation as being some of those sectors where many Asian countries have been able to shine by virtue of having strong opportunity sets that come with it. And that too pairs with different mandates such as ESG alignment, but also more broadly looking at what does this mean in terms of the risk return profile? What are some of the revenue risks that are coming forward, and how is that then mitigated through some of the structures? And the third element that, in some ways, explains why we're seeing greater presence of certain investors in specific markets versus others really comes in their ability to execute. And that element relates to not only the relational elements that comes with the Asia Pacific market, but also more specifically about the ability to manage these investments after the fact. And that notion of having local offices, boots on the ground, local partners becomes quite fundamental. And that mix of those three variables are ones that otherwise help us understand why we're seeing more maturity in different investability metrics for certain
Mhm.
countries and industries versus others, but also increasingly governments are becoming more aware of understanding these dynamics. And that's where you also see in some of my roles when it comes to advising governments is to help them across those different pillars or categories to help enable and foster greater alignment with different capital sources into their own country infrastructure and their specific industries.
Thank you, Sharina. It's very interesting because Asia, of course, is huge, and there's different demographics. For example, India is a young and growing population. China is more of an aging population, so presents different types of investment opportunities. And yet, renewables, what Yang was speaking to, is that doesn't really matter which country. All countries pretty much need renewable energy today. Desmond, let me ask you, so if you can give examples of strategies that are working in Asia. We spoke a little bit before the recording started about some of the strategies that HESTA is pursuing right now, and the ingredients for success.
Yeah, I'm happy to share that. I guess for us, when we were early in our journey, we looked to adopt a sort of a pan-Asia manager with local experience. I think for us, when we did that research piece around different sectors, we were looking for local partners. But rather than commit to a number of specialist managers and locations, we identified one private equity partner that was across each of the markets. And we actually worked with them to build out an infrastructure team as we deployed investments. We started out co-investing together before they had a fund. And this gave us a good sense of their approach and discipline. And it builds comfort with risks and market opportunity. And we find it a great way to partner and build skills together. The first investment we made actually was in India, and it was
Mm.
playing to that energy thematic that everyone was talking about. At the time when we made the investment, it was in a transmission network. We liked the revenue profile because revenues were secured against broader states. And so we were at the time concerned about state-based risk. Over time, though, as we started investing into India, we looked at renewable platforms there. A lot of PPAs are state-based PPAs,
Right.
and we got comfortable with that risk. And I think it's that bit of getting exposure over time, slowly building up incrementally, and getting comfortable with the risk and the market, and having a partner there that is when there's some sort of uncertainty, being able to get on a call and work through and understand what's happening.
Right. Right. And how important would you say it is to have boots on the ground in the different countries that you're investing in?
Oh, absolutely critical. I mean, that was the foundation of that research piece, and why we found a particular partner had private equity teams in each of those markets. They just didn't have an infrastructure strategy, and so we just worked with them to build that out, and sort of built
Interesting.
out the team. But that was pretty much core to how we thought about that market.
Right. And yeah, and considering that China Huadian's focus is on energy and renewable energy, how important is the grid expansion component to your overall strategy?
And we believe that the stable and reliable clean energy is highly potential industry, especially in our overseas project. When we talk about this, it's not only about being clean or renewable, but also we talk about the stability and reliability of power supply. In this information age, when you talk about those popular emerging industry like AI and big data, or if you discuss the innovation of many other traditional industries, electricity is in all means a kind of necessary public product for
Kind of
them.
necessary, yes, I agree.
Yeah, so because stable and reliable power supply is always a must-have support. So in
Mhm.
our view, its potential in providing long-term and stable profits. So using clean energy is one of the important ways to improve their electrification. So it's have so many good chances for us.
Right, right. So, can you expand more on the breadth of the energy projects that Huadin is involved in? So, because it would be grid plus the actual renewable energy itself. So, is there hydro involved there, geothermal, any other types of renewable type energy?
For the business of Huadian, we invest all kinds of ways to power generation.
Mhm.
But now from the 2020, our business is transforming from traditional coal thermal power plant to new energy.
Right.
So for the hydro, wind, and the solar power projects in Asia, our consideration firstly rely on natural endowments as
Hmm.
the geographic distribution of hydropower, wind energy, and solar varies in the different countries. And secondly, site selection is crucial, including the access of the power and the consumption of the power. For example, in the regions like Nepal, with significant elevations difference from the top about 8,000 meters to the 2 or 300. But for the hydropower resource are very rich, but for the local consumption capacity is insufficient. So
Mhm.
also there limits our investment chances. In summary, for the business, for the project selection, we will focus on will be the local policies and laws. The second is the technical feasibility.
Right.
Um, and then the third one is our business structure, and then final is the financial repayment. For instance, if we have a viable projects in one country, Huadian as a major shareholder, along with several other shareholders, uh, should have long-term and stable financial returns in these markets.
Okay, thank you very much. So getting back to sustainability, and looking at what aspects of sustainability you find to be most important to track for infrastructure assets in Asia. Just to note that in the GRESB assessment in 2024, 8% of the infrastructure assessments were emerging market entities. So not huge, but it is growing year over year. But what I found really interesting is that the mean score overall was 83% for emerging market entities versus 86% for all infrastructure assessment scores. So the disparity in the scores is actually really reducing, which basically speaks to a more sophisticated approach for these infrastructure assets in emerging markets. Desmond, I noticed that HESTA has been recognized as a responsible super fund leader by Responsible Investment Association Australia. And I also noticed that PRI reports HESTA tracks 7 SDGs, including health and well-being, which I guess makes sense considering it's HESTA. But I'm just wondering, do you track the portfolio's progress on SDGs using GRESB type data, or is there anything else that you find important uh, to track from a sustainability perspective for your own portfolio monitoring?
Yeah, no, happy to take that one. I mean, just taking a step back, obviously, we're the super fund that services the health and community service sector, and a lot of feedback from our members is to invest find the best risk-adjusted returns, but doing so with impact and making sort of improving the world we retire into. And because of that, we take a standardized approach to how we look to think about sustainability. And obviously, SDGs are a big driver of where we look to deploy capital. When we invest into Asia, I mean, it really depends on the nature of business, where the key points of risk are. In Asia, we tend to focus maybe a bit more on emissions, health and safety, diversity. And in some of the assets we've invested, there's probably been just less awareness and sort of more risk. But sustainability metrics we track consistently across the world, as we're trying to standardize our view of metrics across industries, and it's why we're strong supporters of what GRESB is trying to achieve. Creates a baseline of expectation of what we're looking for in managers, provides a benchmark to compare managers against each other, and that's really important for us as long-term owners to sort of drive that change in assets.
Great, thanks, Desmond. And Yang, if I could just get you to unpack just a little bit more on the sustainability side. We talked about the fact that Huadin did the development assessment this past year, and that was really important, and it's pre-operational. But across the other assets that you manage, do you find that sustainability indicators are important, or which sustainability indicators are you tracking the most? Like, are you looking at climate change type metrics? Are you looking at social type metrics, or as Desmond said, at safety type metrics? Are there any that you find that are particularly important to track?
We are a power producer, so when we talk about this kind of metrics, we would more focus on how to promote the clean energy from techniques to project locations. This is a systematic consideration, and last year, 2024, is the first year our clean energy, the percentage is more than half, more than 50% percentage. And as early as 2021, we have conducted a lot of work relation to environmental and social aspects in our wind farm project in Vietnam. And in accordance with the requirement of the institutions such as AIB and Client Bond, during the design and the construction phases, the GRESB rating aligns closely with our sustainability efforts, while also incorporating some emerging issues. The GRESB assessment process is a very constructive dialogue, and through participating in GRESB, we engage in communication with international peers and a broader range of stakeholders for the perspective of risk management across the life cycle. From our side, the greatest risk is in the feasibility study of the project in the very early stages. A power plant cannot be relocated once it's built, so it's determined by the site selection, which affects the capacity for the connection and the consumption, because the electricity also cannot be storage.
Right, great.
So following is various specific issues from investment, construction, and the long-term operation period. There are also many important topics worth paying attention to, such as biodiversity and engagement with local communities, because in traditional, our power plant is very limited in the area, just inside of the plant. But for the solar or the wind-fired power plants, the area is very huge. So we look forward to finding opportunities to share more details on the topics with everyone on GRESB platform in the future. And
That's great.
in support for the carbon reduction targets for both China and the local government of our projects, our vision is to build a clean and low carbon energy enterprise with globally competitive strength.
Perfect. Thank you, Yang. We look forward to hearing more about that. And
We will try.
oh, that's great. Okay, Sharina, just wondering from your perspective, you've been teaching emerging market fellows through the G7 ILM program on sustainability factors to track in infrastructure investments. Have you noticed any, particular themes come into play? So, Yang was just talking about biodiversity. Is that taking on, greater importance in emerging markets? Should we hold emerging market um, emerging market infrastructure assets to a different standard when it comes to sustainability metrics, considering that, as far as GRESB is concerned, their scoring is actually looking quite similar to developed country market assets. Just wondering what you think about that, your
It's a
perspective.
very interesting question, particularly when we think about the opportunity for quite a lot of greenfield infrastructure, in which case
Mhm.
many of these considerations can then be embedded within the project and program planning philosophies that then guide how different developers and projects are otherwise built towards, and then enables different forms of capital to then be attracted to it. And I'll give you two examples of where we've seen this emerge. So, yes, I've worked with different fellows in terms of helping them understand what are some of the considerations that different types of investors are looking for as it relates to align with their sustainability metrics. And with some of the, say, fellows, for example, that I've interacted with and have taught, there's been a bit of a tension initially about what sustainability actually means. And when we start unpacking this, there is, for the most part, a greater deference given to climate related variables as the driver for that definition of sustainability and hence sustainable infrastructure. So, with that, we tend to see quite a lot of projects within the energy space that are otherwise developed, giving the government approvals to then move forward and then enable more and more of those infrastructure projects to then make it to market. Does that artificially change the definition of the type of infrastructure projects coming forward because there's a deference towards those climate related risks? Perhaps. And we tend to see that in countries like Indonesia, for example, and how then that is put forward with other like priorities, such as related to civil infrastructure, so roads, bridges, other elements that also are of significant priorities. But the big question, of course, is what are the sustainability metrics that can then be put in place as an alignment? And this is where that definition of sustainability begins to grow to look upon variables such as highway safety. What does it mean for the workers? How are then some of those more social variables, as well as the opportunity to divert carbon emissions by virtue of having solid infrastructure, road infrastructure that is less likely to result in congestion? So, a
Mhm.
variety of different metrics have emerged as a way to then synchronize that definition of sustainable infrastructure with a variety of different industries. And this is where we see in that in the South Asia continent in particular, where there are economic demands for these type of infrastructure projects, but they migrate away from greenfield to more so being existing infrastructure concessions that can then attract different types of brownfield investors. So does that mean that emerging markets are being asked to meet a higher threshold? I would say maybe not. Rather, it's an opportunity to, in fact, understand some of the different aspects in the investment global climate and how that
Mhm.
then aligns with the different priorities amongst a lot of different governments, but also how that can then meet the regional but also international appetite amongst different types of investors.
Thank you, Sharina. There's a lot of food for thought there. So, taking another tack. So obviously, climate change is one of the urgent pressing issues of our time from a sustainability perspective. And there is a huge investment opportunity in emerging markets in Asia. Yet at the same time, I wonder if investors are sufficiently factoring in the impacts of severe weather and climate change in their investments in Asia. According to the World Meteorological Association, Asia is the world's most climate disaster hit region, exceeding 49 billion US dollars annually for the past few years. So I'm just wondering how you find in this era of accelerated climate change, how important do you find it is to track climate resilience and adaptation? I can ask you, Jan, to weigh in on that. So in terms of physical risk, would the China Huading assets be at risk? Have you noticed any issues due to climate change? Did I lose you? Yang?
Yeah.
Oh, sorry. So would you like to answer the question? So basically, are investors sufficiently factoring in the impacts of severe weather and climate change in their investments in Asia? I'm just wondering from Huading's perspective, have you seen any issues with respect to physical climate risk for Huading's assets in Asia?
In Asia, we think we find more and more investors coming to the new power generation industry, even some company without energy investment in experience before, because we all consider the change of climate and for the open of the market, and the competition is a little bit more than before, but we still think with the huge population in Asia, and we will still have more chances here.
Mm-hmm. Okay. Desmond, can I get you to speak to that?
Yeah, I mean, I'm happy to provide our sort of perspective, but I think understanding climate resilience and adaptation is really crucial, I think. The world almost hit 1.5 degrees since Paris. I know we're quite close to it. And so for us as a fund,
1.67 degrees last year, apparently.
1.67, okay, I hadn't know. All right, so it's
we're already past it, yeah.
Yeah, okay, so for us, we do actual line item on physical risk mapping in our portfolio. So we identify the locations, we use server providers. I think it was 427, it's now Moody's, to do our risk assessment. We think that level of detail is really important. Another factor is, I guess, in a previous life, I used to manage our insurance-linked securities portfolio at Hester. And so what we do is we still use our insurance providers to provide a perspective of climate change and weather impacts. So we utilize their tools for a perspective around cross-checking insurance costs for assets and how it's going to rise over time into our modeling when we are sort of discounting returns of investment opportunities. To date, it hasn't been material enough to deter. I think in some jurisdictions, climate change is starting to make it uninsurable and very expensive, but that's tended to happen more in developing countries versus emerging. And that's because of the huge densities and cost of rebuild is materially higher, but something that we are tracking very carefully in our portfolio.
Yeah, true. I just was hit by a photograph of the recent California wildfires. There was a photograph that showed complete devastation. All the houses were burned down except one. I don't know if you saw this picture. And I had to laugh because I thought, what in the world is this house made of? How did it manage to withstand all of these wildfires? Yet perhaps I think that the reason why was made with maybe cement, but obviously some materials that were more impervious to wildfires. So from an infrastructure perspective as well, makes you wonder, what can we be doing to try to avoid and become more climate resilient in the future, try to avoid those types of disasters. Sharina, would you like to weigh in at all on this topic of climate change and infrastructure investments, how to ensure climate resilience and what it's important to track?
I think everyone has spoken to the sheer importance as it
Yeah.
relates to risk. So, is identifying the risk, how then to quantify that risk, and what are some of the mitigation opportunities that exist, and knowing that it's rolling, whether it's on a line by line basis or it's in terms of how that project on a project level is then overseen. The only thing I would add to that is moving beyond identification of those different risks is also a growing I would say capacity building exercise that's happening
Yeah.
in terms of if we had this conversation perhaps 5, 10 years ago, whether or not we'd be able to, in fact, say, yes, that is a risk worth looking towards or being able to push a little further versus today, in many ways, it seems opposed that it's not even questioned. We identify that there are climate related weather events, there are adaptation related risks,
Right.
and we cannot afford not to take those risks seriously and look at how then to manage those risks. So that is something that I see as a trend moving forward. And it's something that with the greater sophistication, access to different data sources can
Sure.
otherwise enable broader
Mhm.
pricing and metrics related to being able to understand that risk and taking that one step further, how some of the different tools that are existing, such as some infotech tools, are being able to offer a relay of some of that data in real time to then enhance not only on a specific investment perspective but also on a portfolio basis to help
Mhm.
make more risk informed decisions. So I think we're at that point whereby sustainability, climate related risk, and infrastructure are just intricately weaved together.
Intricately related. And if you think about the time horizons for most infrastructure investments are much longer term. And so from that perspective, when you're doing your net present value calculations about, building with more climate resilient materials, et cetera, even though it might be more expensive in the short term, over the longer term, it might be the right thing to do and the only thing to do. So it could completely change what we do in the future. Okay, so for the second last question here, what other trends are you seeing in infrastructure investment in Asia? And the elephant in the room, I guess, is the question, how will the Trump 2.0 administration impact investment in Asia? It seems to be impacting everything these days. Some analysts are postulating that institutional investors may feel like they are underweighting Asia, considering the current fiscal trajectory and perhaps the seeming overvaluation of some US stocks. Um, so I'm just wondering if this has crossed your mind at all and if you're seeing any impacts in the near term regarding the geopolitical situation right now. Or do you not want to answer this question? That's okay if you don't want to. Desmond.
Yeah, I mean, geopolitical concerns are a global concern, and from my perspective, contagion can come from anywhere. I think in Asia, each country is quite different from a geopolitical standpoint. So it's important to be diversified on what risk exists, and we've sized our positions accordingly. And you try to price it into your return. Again, it comes down to local partners in market being able to explain risks as they play out. We recently exited investment in South Korea, and there was martial law in December that time period. Able to pick up a
Wow.
call and just leverage geopolitical experts is really valuable. I think for us, we're continuing to deploy in thematics that sort of long-term sort of weather sort of macro uncertainty. And so, our approach is continuing to deploy into India. We've made investments in transmission networks, renewable platforms, and roads. In Philippines and Indonesia and Vietnam, we've probably had more indirect exposure through fund investments. We've got platform companies that have sort of built out data centers into EM and renewables. So for us, it's just watching the sector and just incrementally building over time. But obviously to be aware of the risk and
Being aware. Yeah.
I'm fortunate enough to have a whole macro research team that we leverage. So we think about geopolitical risk on a whole of portfolio basis. And then the other piece is you've got to price it, right? So on a quant side, we'll look at debt spreads, try and work out the enterprise equity risk premium. We'll look at those sort of elements, cost of hedging, all these sort of elements factor into how you want to price uncertainty in markets. But everything has risk. just need to be paid appropriately.
Everything has risk, exactly, and trying to get it right is almost impossible. So that is why it's important to hedge, etc. So Yang, would you like to weigh in on this question at all? Anything to add?
I think we will face more difficulties for the increase of interest and the uncertainty of the policies in Southeast Asia, and will be they're more difficult for us, and we will consider and take more measures to manage our projects.
Exactly. Well, in Canada here, we have, we're looking at huge tariffs on steel and aluminum. So originally they were saying 25%, now it's 25 plus 25%, so 50%. So we're wondering what the future is. And of course, those are very key inputs. Steel, in any case, very key inputs into core infrastructure. So I'm sure it's going to have, it's going to be additional impacts globally for those countries that are suppliers of core materials needed in infrastructure. Sharina, anything to add?
Well, you highlighted the uncertainty that a lot of these different items are pulling into place, and how does that then drive investment decisions? And what we've observed so far has been really the ability of different investors and their time horizon and their capabilities as it relates to manage, keep a pulse on, and then navigate different risk profiles in certain regions are more superior than others. And that's largely because of what we talked about before as well, in terms of expertise, being able to be in a region for far longer, having relationships, and also having the opportunity to potentially exit or maybe not, depending upon the particular investment that comes forward. I would also note that there are certain regional biases that we have seen as it relates to pricing geopolitical risk. And for a lot of emerging markets, not just Asia Pacific, it has artificially resulted in risk premiums being introduced that don't have much basis in data whatsoever. So much so that different investors just take a pass on different regions around the world, notwithstanding what we talked about earlier in this webinar. So, with that in mind, being able to gain access to data, identify what those opportunity sets are, and whether it's through partnering or being able to make a greater investment in understanding what that geopolitical risk can be, can help different investors understand, well, is this in fact a risk we're willing to take? Or are we better off just waiting on the sidelines and waiting? Because for some, that might just be a missed opportunity and perhaps a great competitive edge for others.
Exactly. An opportunity and an opportunity cost, right? That was a perfect way to end off, Sharina. Thank you for that. Desmond or Yang, any final thoughts you would like to add before we sign off?
And thank you, Alison. I do appreciate this opportunity to communicate with you and other speakers. And we will continue to explore clean and low carbon energy projects. And we are looking forward to cooperating with investors around the world to develop clean energy projects and pursue a shared future of a sustainable world. Thank you so much.
Thank you, Yang. Desmond, anything to add?
No, I mean, for me, I think for us and Hester, investing in Asia has been a success for our program. It's very diverse. Each country is very different. But we've been fortunate to find a good partner with local presence to help us build that over time, and risk tolerance builds over time. I think for us to build out more scale, we're going to need to see more change. And Sharina and everyone else has sort of talked about that. I think local debt financing improving over time will allow you to fund a lot more projects and those sort of elements. So we're just watching and seeing, but we're obviously keen to continue to deploy because it's been a great story for us.
Well, Yang, Desmond, and Sharina, thank you so much for joining us today. We really appreciate it. And we look forward to continuing the conversation in the future. Have a wonderful day.
Thank you.
Thank you.